Well, the Nifty recorded its 7th consecutive yearly gain for the first time in 28 years. The sensex and the Nifty surged 4% this year. But guess what? Individual sectors did even better. The Nifty Bank outperformed. It rose 21% this year. The metal index had a 21% rally. And on the flip side, IT saw the biggest losses. But on this edition of the Editor's Roundtable, we take a look back at the year that was for the markets and what 2023 will hold. This is the last and final Editor's Roundtable of this year. I'm Sonia, and with me we have Anuj, Prashant, Nimesh, and today we have Nilesh Shah of Envision Capital right here. Folks, the year is over. And it's finally time to make resolutions. So, Anuj, what's your resolution?
My resolution is to do what Nilesh does for fitness. You know, he just stays like this forever. I have been seeing him since 2003, and he hasn't aged one day.
Yeah.
I'm telling you, just look at him. You know, it like gives
Nilesh,
us
what is the secret sauce you have to tell us?
So now, by the way, before you answer that, you know the resolution for all of us, right? Lose weight. So please, go ahead.
No, I think it's the markets which keeps you fit, nothing more. And I'm sure that continue to do the same old stuff, which is, I think, both be disciplined in markets, be disciplined with your own health and your own fitness.
I think
That's
the
it.
most disciplined guy in terms of health. You know, once I offered him a sandwich, and he said, no, I mean, no bread, no sugar, nothing, guys. Just
I think he doesn't want to give away his secret sauce. That's why he's saying, you know, just do what the
he is
market
very
does.
disciplined, both in markets and in his health, and it's visible in the results,
No,
both
actually,
in his
Nilesh
portfolio
has
and in his health.
He's gotten fitter. You know,
Yeah,
he was.
exactly.
It's incredible, right? People go the other way. You've gone. You know, you become even fitter. So it's incredible.
What about you folks? Any resolutions?
We just told you, right? At least for me.
Yes, that's been the same resolution for the last 20 years.
And you break every year, right? So
You know, you hit a certain age. I'm not saying I'm old, but you know, New Year resolution for perhaps one big Nimesh.
no resolution here. I mean, just work hard, work fitter, try to be more fitter. That's
But-
it. We say this every year and we fail to do this every year.
So that's what I'm
the big
saying, because
resolution.
every year the resolution fails. This year I made one more resolution. This year I'll be happy.
Happy.
You know, it's just ignore everything and just
Wow.
be happy. That's
You
it.
know, Nimesh had a resolution. He said, I'm going to work harder this year. Nimesh, I think you take that back.
No, I mean, see, again, it's a
Have a little fun.
tell you, we
whole
were
point
on-
is, na,
we were-
ki it's a resolution, right?
we were
You're
on-
not going to do that. So that's why it's easy to say, na, that work harder.
He
as
meant
simple
it.
as
He
that.
meant it. We were on closing bell. We were having the show, and Rima and I were talking about, you know, party plans, and you know, I don't know who the guest was. Someone, you know,
Mangalam was there as well.
drinking and partying and eating, and we go to Nimesh. What's it? Work harder.
That's how it is. Now, you have to say something which you're not going to follow, right? So it's easy to say, you're going to work harder.
You made all of us look bad.
And work smarter, maybe, right? That's a good way to look at it.
And our director is telling us to be disciplined on time. So, you know, let's now talk about the market. And, you know, we'll of course discuss this in details, but it was a good year overall. Just towards the end, there was a lot of volatility, especially on the last day of the year, the market decided to throw in a googly, but otherwise, quite a good year, actually.
Okay, so we're all going to sort of wrap up the year in different ways. Nimesh, you've been working the phones through the year. What do you have for us?
So, you know, Sonia, if you look at this year, I mean, 18,800 on December 1st when we started. Today we are at 18,000. But in between, you know, we hit a 18,000 high of 18,700, low of 15,100, and then again back to 18,000. It's been a big roller coaster ride, and it's been a difficult year, so to speak, for especially for traders. You know, for investors like Nilesh, they've easily made money, but for traders, it was a difficult market for sure. Had you asked anybody at the beginning of the year, the best performing sector, no would have predicted the PSU bank index would have been a big performer, right? And that's been a rank outperformer and a surprise a lot of people. The other big takeaway for me was the fact that nobody in the starting of the year would have told you that promoters and private equity investors will sell 3 lakh crores of shares. They've sold 3 lakh crores of shares in this calendar year, and it all got observed by the domestic fund. So again, you know, a big number, so to speak. So that's been a big standout for me. But you know, index is not saying you much, but there has been a big roller coaster, and it's been a difficult year for the traders, you know, the year which has gone by.
Okay, Anuj, what about you? What are you looking at?
No, but Sonia, actually, this, you know, 2022 was, while you might look at the year and say it delivered 5%, so in that sense was an underwhelming year, but actually it was far better than what it looked. You know, things looked better than they actually, you know, than what the numbers would suggest. 33 Nifty stocks gained and 17 Nifty stocks were lagging behind. And what was interesting was that only IT pharma and real estate among the bigger indices. And real estate is not really as big. So only IT and pharma were down. Rest all other sectors actually were higher. All other big sectoral indices were higher and higher by some margin. So if you sort of avoided, I mean, it's easier said than done. If at the start of the year you had avoided the two trouble sector, which is IT and pharma, this year, if doing nothing, just following an index, you would have made a good 20-25%. And portfolios would have made a lot of money. Now look at these numbers. PSU Bank Nimish already mentioned, but 71% gain. Power, CPSE, metals, Bank Nifty, FMCG, capital goods, oil and gas, autos, all gained between 16 to 25%. So that's what I'm coming to. Now, obviously, there was IT, which is down 25%. And because IT has a significant weight in the index, or at least had significant weight in the index when we started the year, that sort of punctured the overall move. And of course, you add in pharma as well, which was down. Now, the other interesting bit was how the leadership changed. For the last 2 years, it was all about IT. IT was helping the market. Look at what happened this year. This is the contribution on the Nifty. The banks contributed 800 points on the upside. FMCG contributed 315 points. Reliance contributed 141 points. Reliance is a sector in itself now, of course. And IT, look at that, 650 points. A lot of good work of banks got negated because of IT. And I'm, now rounding it to individual stocks. ICICI Bank, 276-point contribution. ITC, 256-point contribution. You have the list going for you. You will see a lot of banking names, HDFC Bank, Axis Bank, SBI, all on the upside. What were the four big drags on the index? The four stocks which dragged the index by at least 100 points or more. Infosys right on top, almost 300 points. And then you had Wipro, Tech Mahindra and TCS all dragged the market by almost 100. Now, let's go through each one of them separately, very quickly. PSU banks, what really changed? Significant improvement in asset quality and visibility of earnings over the next 2 years. Also, for a lot of these sectors, what mattered was starting point. When PSU banks started, nobody wanted to buy them. 0.2 times price to book value. And that was the under ownership which got corrected. Apart from that, this was the year of the three I's. The first I was ICICI Bank, clearly the leader, has led the Bank Nifty now for 3 years. Also told you what a good management can do despite not coming on media or not appearing anywhere. Under Sandeep Bakshi, silently the stock has moved up and is now trading at par with HDFC Bank in terms of valuations. ITC, the revenge of ITC against the memes. This was the year of ITC, and I think the Russia-Ukraine war was clearly the game changer. And Infosys, where the decline was because of the worries in what's happening in the US. And again, starting point, Infosys started the year with 25-26 times price to earnings, and that was never going to sustain. One last thing I would add, this is a great year in terms of domestic equity cult. Who would have thought that FIs would sell 2.7 lakh crores and still the market would be up? And that's because DI has matched it dollar for dollar or rupee for rupee by buying 2.73 lakh crores. So for me, 2022 was a great year.
Okay, 2022 was a great year. Nilesh, how about you? You were speaking about the top leaders, the top laggards. Is there any sector where there is under ownership, where you believe that, it could sort of take center stage in 2023?
Well, I don't know about the under ownership, but what it looks like that what worked in 22 will probably continue to work in 23. So sectors around cap goods, auto ancillaries, defense, these are themes or sectors which have probably just started. Normally very long-term trends, structural trends don't kind of, fizzle out in just about a year of outperformance or in a year of solid absolute returns. These are themes which go on for 2 years, 3 years, 5 years. You could have lots of volatility, and I think, the year 23 could be pretty much, again, a volatile year. But I still think that it's going to be these very sectors which will kind of continue. I mean, the whole restructuring of, say, the PSU side, whether it's PSU banks or any of the other PSU undertakings, these are things which will probably go on for at least another 2 to 3 years. So I really don't think that the sectors of 22 will essentially fizzle out. If at all, the sectors of 22 will continue maybe at least for another year or two before they really start to kind of give up their outperformance. So it's still going to be the same very old sectors which will do. Apart from that, I think there could be few other candidates which could kind of have a strong bounce back. So IT's had a bad year. It's quite possible that, probably in the second half of 23, we could see IT come back. Some of the beaten down so-called new age or online kind of stocks, if they have been guiding for turning profitable in 23, and if they do demonstrate that, then I think there's a case for them to bounce back in 23. It doesn't mean that they kind of get back and go back to their old highs or anything like that. but probably they could kind of even rally 40-50% from where they're closing today. So I think it is going to be a very broad-based market. Several sectors are going to see massive participation.
All right, we were talking about 2023, but I decided to zoom out a little bit and look at the annual returns, and not just this year, but over the last several years. Let me actually go across to the big wall, and I'll tell you what I'm talking about. So the way I'm kind of framing this is here, right? Are we going to see a 7-year itch, or will we see a 8th wonderful year? That's the point. I'll tell you why. 2022 has been this longest positive streak in the history of the market. 7 years, the market's been higher. Now, this is the longest streak in 32 years. We have data for the Nifty starting 1990, because the time series is available, the NSE makes it available. The Nifty the value started only publishing from 1996. But so if you go by the time series, the longest stretch of gains, single longest stretch of gains in the last 32 years of Nifty's existence. This is data starting 91 with a 4-year gap, 91, 95, 99. Just to give you a sense, we had one particular period of outperformance which lasted 6 years, which was the longest before the current, which was between 2002 and 2007. And of course, in 2008, the market dropped because of global financial crisis. So this is history, right? Now, if 2023 is to be a good year, it needs to do a few things. It will need to be higher for the 8th straight year. Well, no reason why it can't be. I mean, it's not a given that it can't be, but there's something to be said about cycles, right? It works here, it works, it's worked in the US, it works around the world. We'll see. But history does not sort of suggest that it'll be an easy year, looking at what the performance already so far. Starting valuation multiples, right? 1 year forward, multiples at 19 times. I've rounded these off. Last 10-year average is 17 times. So again, a little higher than what the average multiple is. It's not at a peak. Peak was 20, 21, 22 times. We're at 19, but higher than the 10-year average. The last time the Nifty outperformed the NASDAQ, this is global outperformance. The last time Nifty outperformed the NASDAQ in dollar terms by over 25% was only once. That is in 2007. And of course, 2008, we all know what happened, but there was an externality, which is the global financial crisis. This year, we've beaten the 2007 record, and the market is up 28%, in dollar terms, right? So that's quite something. Now then, there is the election angle. Next year is 23, which means the year after is the general elections, 2024. These are pre-election year returns for the Nifty from the high in that particular year to the closing. 2018, the market was down 8. 2013, flattish to slightly lower. 2008, of course, a big drop. 2003 was interesting. We started 2003, dropped 15% to the lows in April that year, and then the market rallied 100% to close that year out in spectacular fashion. But 3 out of 4 times the market was down to flat, right? That's the evidence. Now, none of this is to say the fact that we've been up 7 years, or valuations are perhaps at a slightly higher level, or the fact that global outperformance is quite high. None of it is to say that we can't have another 8th year, that 8th year wonder. It is just to say that perhaps one needs to keep expectations under check. When you hear that 2022 has been very tough for India, so 23 should be a great, wonderful year, I would say, if you keep expectations low, return expectations low, and you come out with flying colors, as we hope we will, I think it is all the better in terms of feeling. I just want to put that and throw it to Nilesh. Nilesh, any thoughts? Go on.
Prashant is sort of pouring cold water on everyone's enthusiasm. So if you have expectations that 2023 is going to be a better year, just, cut back on those expectations a bit. Would you agree?
No, I don't think one should cut back on expectations. I still think that 23 is going to be a good year. See, look at it. I think 2022, when we started off, or probably at least when we were in Q1 of 23, between Jan and March, we could possibly have all the negative news flows. It was very evident that the US Fed is going to tighten, and tighten quite significantly. We had the Ukraine war, which broke out in February. And one would have thought this is going to be a negative year. It didn't turn out to be. And what really saved the day was A, earnings, and 2, is of course the resilience of the domestic investor. I think that both these variables will continue even in 23. And no matter whatever headwinds we had, the market still delivered single-digit returns. So even if I think 23 is a repeat of 22. I think that should be great.
You know, a little bit of Buffettology. Warren Buffett was once asked, I mean, of course, he's famous for giving life lessons also, right? He was asked, what is the key to a happy, long, successful marriage? And he said, low expectations. So, I mean, you know, I think it's great, right? We cheer our own story, and we should, rightly. But sometimes I just fear we get far too ahead of ourselves, right? We are the best, and this is going to be... So maybe, you know, my only point with that data was to kind of keep expectations under check and come out winning.
This is where I remember Samir's interview, Samir Arora once. You know, he said that 2008 told him, before 2008, he used to think that India is the best country in the world and we are the God's gift to mankind in terms of markets and all. And then, you know, 2008 came and it told me that, no, we are just the same. So
keep your expectations and your demands low,
absolutely,
both in a marriage and in the market, right? It will serve you well.
Yeah, but just on that note, Anuj, 2000, I mean, normally when the world corrects and corrects quite significantly, India probably corrects more. India actually shows up like an emerging market, clearly shows a much higher beta.
You fell 58%,
I think 22, honestly, has been even a surprise for me, where I would probably thought that global equities would be bad and India would follow suit. But I think 22 has been very, very different from what probably expected that. So maybe there's a bit of a trend reversal. I think whatever has happened in the past, I think 22 has been a different year from that perspective.
Because of the domestic flows.
That's
SIP is in that one, right?
Absolutely.
I mean, absolutely. Spectacular.
Okay. In fact, Nimesh, I think, has some data to share as well.
Yes, so, Sonia, every time we look at the individual names and the individual stocks, what I've done today is, because it's a year end, I've looked at what the big boys, the conglomerates, have done in 2022. And it's been interesting data, for the whole year. If you look at, it's been a mixed bag for the conglomerate, so to speak. And no guessing surprising that, the biggest gainer or the biggest contributor in terms of the market cap gain has been the Adani Group. That group has gained 78% in market cap in just 2022, followed by the two South-based groups, the TVS Group, which has been a consistent outperformer, and Murugappa Group giving 30% returns. And the big boys, HDFC Group has given 8%, has gained market cap by 8%, and Reliance has gained market cap by 7%. On the other side, there has been some losers as well. So the conglomerates who have lost market share or market cap this year, Ramco Group 30% down, Godrej Group is down 17%, Tata Group is down 8%, the likes of M&M down 4%, and Bajaj Group has lost 2% market cap in 2022. But there are interesting, contributors to these gainers and losers as well within the group. So for Adani Group, the biggest contributor in market cap has been Adani Enterprise and Adani Total Gas in 2022. For HDFC Group, the biggest contributor has been HDFC Bank. Look at Reliance Industries. Of course, the big boy Reliance has done well. In the Murugappa Group, the two big surprises for this year were Tube Investments and Chola Finance. And for TVS Group, the biggest contributor came from the two-wheeler major, which is TVS Motors. Out of that 26,000 crore, the big chunk came from that. Within the Tata Group, among the losers now, TCS has been a big underperformer, and that's dragged the whole market cap for the Tata Group in 2022. And that's been the trend for all the larger losers as well. Even in L&T, the biggest drag has come from Mindtree. For Godrej Group, the biggest drag came from Godrej Properties. For Bajaj Group, the big surprise is, for the first time in many years, the Bajaj twins, Bajaj Finance and Bajaj Finserv, has underperformed and that has dragged the group down in 2022. For M&M, again, the same story. Tech Mahindra has been a big drag, and that's dragged the overall performance for M&M Group. And for Ramco Group, the biggest drag came from Ramco Cement. So these are the big numbers that what the conglomerates have done. It's been a mixed bag, but the big takeaway is Adani Group has been the biggest gainer, gaining 78% in market cap in CY 2022.
All right, Nimesh, thanks a lot for that. Well, on that note, let's slip into a short break, but don't go anywhere. We'll come back with more on the markets, what to expect from 2023, and some commentary from Nilesh as well. Stay tuned.